here with us carries on this tradition of excellence. He is truly a remarkable member of the mining community. Truly, I heard this man speak last night at the Canadian Mining Hall of Fame dinner, and it was just brilliant. First, he tore up his notes, and then he got into one of the most inspiring speeches that I've heard in a long time. Ian's path towards mining prominence began with his graduation from the MBA program at the University of Ottawa in the mid-1970s. After completing his degree, becoming a chartered accountant, Ian went to work for Hudson Bay Mining and Smelting. The knowledge he gained regarding strategic planning and business evaluation set the stage for his co-founding of Wheaton River Minerals Limited in 2001, along with partner Frank Gooster. This mid-sized gold producer thrived under Ian's leadership, eventually merging with Goldcorp, which itself became the most valuable gold company in the world. Ian went on to serve as president and CEO of Goldcorp, and in 2006 accepted the role of chairman of the board, a position that he continues to hold. Of course, over the course of his 35-year career, Ian has worked with some of the mining industry's biggest names, and along the way he became one himself. His career has had ups and downs, and he's going to tell us about some of those. He's made some mistakes, but he's probably on balance, he's made the right decision most times. He's a firm believer in the idea that success is often born of failure and that opportunity is always around the corner. You just need to be prepared to seize it. As Dominic mentioned earlier, Ian is a 2015 Canadian Mining Hall of Fame inductee. He's the chairman of the world's third largest gold producer. That's pretty good. He's the former chairman of the World Gold Council. He has served as a director and officer of a number of Canadian and international mining companies. He is an incredible philanthropist supporting many causes, including education. He's the namesake of the Telfer School of Management at the University of Ottawa. He is the recipient of countless industry awards and a true legend of Canadian business. We're very, very pleased to have him with us today. Ladies and gentlemen, please join me in welcoming Mr. Ian Telfer.
Well, needless to say, that introduction is tough to follow. I don't think I've ever had anyone stand up and say, I heard this person speak 12 hours ago and they were very good. It sets everyone else up for disappointment. So first, let me just say what a pleasure it is to be here at Laurentian and to be here in Sudbury. We came into the university, I was reminded of the fact that I think I visited this university in 1972, which is probably before most of you were born, and certainly any of the other staff members had ever been to Laurentian. And the reason I was here in one of my earlier careers before I got into mining, I went around calling on universities and community colleges in Ontario in the role of what they call the field editor for Prentice Hall. So I would come and meet with the profs and see if anyone was writing a textbook that they might be interested in, but of course also encourage them to use whatever books they were giving to their undergraduate classes. So I got to see the Ontario University infrastructure grow over a few years. I got to meet a lot of interesting people. I got to travel to a lot of places, and I would go to the Haileybury School of Mines and Queen's University and Laurentian and every place in between. So the interesting part of my development, at that point in time, there was no way to ever think, why would I ever come back to Laurentian and in the winter? And how I would ever end up in mining or be here in a role like this. So I guess to a lot of you, to young people out there that are looking at career paths and directions, etc. Before I get into the mistakes that I made, one of the observations I would make is focus on how you want to live and how you want to conduct yourself and what kind of role do you see yourself in, and quite possibly what field do you think you'd like to get into, but it's very difficult to plan the path that will get you there. And don't worry about the path. Worry about the goal and worry about doing your best at whatever you're doing now. And when you look back at your path, and I'm sure Dominic's path is the same and anyone else's is the same, when you look back at your path, yeah, it all sort of makes sense. I see how I got here now. But at any point in time, it wasn't clear when you're starting out that this is how you get there. But I'm sure you'll figure that out. The other thing I just wanted to comment on before I talk about the mistakes, I just want to talk a little bit about decision making, because all of this involves decisions. And throughout our lives, we're all making personal decisions and financial decisions and relationship decisions, corporate decisions, etc. You're always making decisions. And anytime you're making decisions, there's a lot of variables out there. And sorting out those variables and trying to figure out what the best thing to do is the main thing you do in life. And fairly recently, I heard a speaker talk about how you decide what you should do when you're making the different decisions in life. And the formula that he used and that I have now been using, and I can tell you Goldcorp now uses, that my kids are using, is that when you're looking at alternatives, and as they say, they could be in any area or any field, try to make the decision that has the least potential for future regret. And that sounds pretty sort of obvious, I guess. And what does that mean? And the analogy he used wouldn't apply to any of us, but he said, for example, if you got accepted at Harvard, but it's quite expensive, and you got accepted at the state college, and you're wondering which one to do, he said, I would probably choose to go to Harvard, because if I go to state college and my life turns out to be just okay, I'll always wonder, wow, would things have been different if I had gone to Harvard? He said, whereas if I go to Harvard and my life turns out to be just okay, I'll think, well, I guess my life's just supposed to be okay. And it's so simple, but I'll tell you, as the year or your life goes on and you have different decisions to make, and as I say, they can be in all aspects of your life, sometimes the decision you're struggling with and you put it into which one would I regret the least? Which one is going to give you the least grief, going forward? It clarifies the decision right away, and it makes it a lot easier to make it. So I pass that on to you. Hopefully it's useful to you. And as I say, I found it to be very, very, we use all the other variables you go through, but I found it to be very, very helpful. So, mistakes I've made in mining. And again, I'm just going to try to personalize some of these, because a lot of the mistakes I've made are sort of corporate type mistakes, and when you're running a company, whether it's big or small, but that's not the situation all of you were in. So I would say one of the first mistakes that I've made and a lot of people make when they're making decisions, again, is fear of failure. They really like to do something, but gee, it's not guaranteed, and there's a chance they might fail, and what are people going to think, or how's it going to look, or what will people say about it? And so they hold back from making that decision, and that's very unfortunate. As you go through life, you'll learn that people actually aren't watching you as closely as you think, and they don't really care as much about how you're doing as you think. And so you should really focus on what you want to do and what you get excited about. And there is no reward without risk. Anything you're going to do in life that's going to be meaningful to you, there's going to be a risk to it. And you have to identify that risk, and then you have to decide if you're going to go ahead or not. So don't use fear of failure as a reason for not doing something you really think you'd like to do. Another mistake that I've made many times is listening to too many experts, or in the case of a public company, listening too much to shareholders. I know all you shareholders at Goldcorp love to hear that, but in general, if you're just talking about shareholders and public companies, because there's constant sort of tension between the companies and the management, the situation we're in, where the companies like ourselves are owned by pension funds and professional money managers, they have a fairly short time horizon because they've got to show success in their portfolios every quarter because they're trying to attract more money from outsiders. We're in a business where it takes us 5 or 10 years to find and build and construct a mine, and then the mine is running out of ore in about 15 years. And so over 25 years, we have to invest all this capital, and then the asset itself disappears, and so we have to be prepared to acquire another asset or figure out how we're going to keep going forward. And so the time horizons are out of sync. And so there's a lot of commentary in the press the last few years. Gold mining companies had made some acquisitions when the gold price was high, and those acquisitions didn't look very good when the price of gold went down. And so the pressure from the financial community was, don't buy any more things, don't do any more deals, you can't allocate capital, you don't know what you're doing. And those of us in the industry are going, well, and of course we're mining every day. As I'm speaking, Goldcorp's running out of gold, so is Kinross, so is Barrick, every single day. And unless you have some plan in place to replace that, you're going to be out of business at some point in time. Whereas the shareholder, well, he'll worry about that when you get closer to running out of gold, but right now, he wants to own your stock and he doesn't want you to go out and do too much. So you have to think for yourself, think what your time horizon is, and let the experts or the shareholders do what's best for them, but none of them are permanent. You and your employees and the communities you operate in, I think you can try to consider permanent, whereas the shareholders are temporary. And you have to keep that in mind when they're trying to advise you as what you should do. Another thing that I've noticed, everyone's looking for opportunity in life and in companies, and they're waiting for opportunity. A couple of things. Opportunity actually knocks quite softly. And so most people don't hear it. And when I look at the Robert Friedlands or the Frank Justers or the Rob McEwens, they heard opportunity knock. They recognized there was potential to create value or success or whatever it was. They were listening closely. They were watching, the world around them. They would hear something, and then they would act on it. And the second part of that sort of opportunity knocking thing is, and then when some people sort of do hear opportunity knocking, they hesitate. They wait to see if it's going to knock any louder. They're not sure how they should approach it. And that is a huge mistake. When I've had the opportunity to work with Ike Batista, and who's, maybe the most successful, at least for a while, mining entrepreneur in the world, and then Robert Friedland and Frank Juster and Rob McEwen, sort of four of the best mining entrepreneurs that Canada or any country ever created. And it was totally coincidental. I happened to work with all of them over about a 20-year period. But what you notice with them is when they heard opportunity knock, they acted so fast and with such intensity and such force, and they were all in to take advantage of it as they saw it. And again, while they're doing all that, all the experts around are saying, oh, be careful there, and this might not work, etc., etc. They have to absolutely ignore that noise to be successful. So when you think you do hear opportunity knocking, and you're thinking of pursuing it and taking a financial risk, either leaving a job or mortgaging your house or whatever it is, you can be sure that your brother-in-law and your uncle and your lawyer and your accountant will point out all the risks, and it's up to you to figure, okay, which one will I regret, doing it or not doing it? And try to filter it through that as you make up your decisions. The other thing that mistakes I've made a number of times is, again, when the people around you or the world in general is indicating that you should acquire this asset, or you should build this mine, or you should take over this company, and so you're moving down that path, but your gut is just sort of niggling away there, sort of a spidey sense. You're not sure if this is the right thing to do, and but everyone around you is pushing you in a certain direction, you or your company or whatever, but you're just, you're not quite comfortable, but you don't really want to disagree with everybody. And so you go along with what you're supposed to do, and so many times it just doesn't work out as they all thought it would. And you think back and you kick yourself for not speaking up, or not slowing it down, or not letting people know you're not comfortable, or not stopping the train. And I have done this on a number of occasions. And so what you see looking at successful people out there is first they hear opportunity knocking, and then secondly, they listen to their own gut. They listen to their own feelings. So don't ignore your own feelings when you're looking at making, as I say, any decisions in life. Your own feelings are sending you a huge message. Steve Jobs, when he spoke at Stanford, a number of years ago in a fabulous commencement speech that if you've never looked at online, you should look at it. It's quite incredible. It's not very long, but the basic message is listen to yourself. Listen to yourself. And that's an important thing for you to learn. And the other thing that happens, you notice if a young entrepreneur is trying to do something, and it can be in mining or technology or anything else, and of course, because he's an entrepreneur, people around him telling him it's not going to work, but he persists, and it works. So he gets confidence in his feelings. And then the next decision comes along, and he's he's really listening to his own gut, and he's really confident in what his gut's telling him. And Steve Jobs or Ted Rogers or any number of very successful, they all have the same experience. The first thing they wanted to do, people told them wouldn't work, and they fought you and did it. Then the second thing people were trying to tell them wasn't going to work, well, they listened a lot to them, a lot less to the experts then. And by the third thing or the fourth thing, they weren't listening to anybody. Now this makes them very hard to work for, because they won't listen to anybody, but it's because they could feel what they were feeling and react to it without being persuaded from not doing something by somebody else. Another mistake I've made, and lots of people make, is, I'll start off in general. Success is very fragile. And what I mean by that is that if someone's working somewhere or has graduated from somewhere and they're working and things are going pretty well and they're getting some recognition, they'd like to make more money and they'd like a better title, but things are going pretty well for them. And they look at another industry or another company or another situation and think, well, I'm pretty good at what I'm doing over here, and that business over there is only slightly different. I think I could probably do better over there. Be very careful about assuming that your skills are transferable. In my case, in the late 90s, the gold industry was in complete turmoil, and I had ended up in a situation where I'd started off with a shell company. It had been a mining company for a while, and then we had to sell the assets, and so it was back to a shell. So I was sitting there in 1999 with a company with $30 million in it, of which I own about 1% of the company. And looking around, what could I do with this to try to get the shareholders to get their money back? And this was, of course, during the dot-com boom, and I read about these companies in the States that would raise some money, and then they'd become incubators to other internet type companies. So I phoned a few tech analysts and said, could Canada use a company like this to invest in startups? And they were calling them incubators, and these guys said, oh yeah, that'd be a great idea. I said, okay, fantastic. So, well, gee, I don't know much about this, but it's going to be a public company. I know about public companies, and we're going to raise money, and I know how to raise money, and we're going to hire people, and I know how to manage people. The only difference is my experience is in mining, and this is in technology. How hard can that be? So I hire a bunch of experts, really super group of people, so super that the stock by the time we went public was trading at 6 cents. And with the announcement of all these people joining this company and what the strategy was to hop into this tech boom, the stock went to $5. So the value of the company went from whatever that is to over $1 billion. And so we raised money at, so we raised money at $4, from 6 cents to $4, raised all this money. All these tech guys were out buying little companies and doing all these internet deals all over the place, and built up this huge payroll of people, and all of a sudden the money started to go out the door, and then we merged with another little company to get their cash, and then we did a deal with Compact Computer to get some cash from them, and then when the tech bubble burst, the whole thing collapsed and went to zero and went bankrupt. And in case you didn't know, if you're ever a director of a company, a public company that goes bankrupt, you have to put that in your personal information form of any company you're involved with for the next 10 years. My 10 years just ended about 2 years ago. But what I learned was, whereas I thought my experience was in financing and interpersonal relations and shareholder relations and regulatory things and managing people and setting objectives and approving budgets and all this, I wasn't aware of, all companies have those same functions, but your experience is really with what the operations are going on underneath that, and not in all the processes involved. And so again, I've saw it in myself, I've seen it in other people, I've seen it in corporations, and this doesn't apply to any of us, but at one point a number of years ago, Coca-Cola decided that they were watching how fast the wine industry was growing, that hey, they could get into the wine business. I mean, it's in bottles, it's liquids, it's advertising, it's young people, it's lifestyle, it's distribution, it's trucks. I mean, it's almost the same business. So Coca-Cola spends hundreds of millions of dollars, it buys a couple of wineries, and 10 years later writes the whole thing off. Like, they just couldn't make any part of it work. And they were so shocked, because again, to them, looking at it the way, selling alcoholic drinks compared to sugary drinks, they didn't think there was that much difference. It turned out to be a huge difference. And so in your own lives and in your own careers and in your own companies, keep that in mind. And there's all kinds of examples of companies that thought they were just going to change their business just a little bit, because the other pastures always do look greener. If you're in real estate, a lot of the time the gold business looks pretty easy. And if you're in the gold business, lots of time the real estate industry looks pretty easy. And so it goes back and forth. They're all pretty challenging. They're all pretty difficult. And so, as I say, I go back to it. If you're having success, even in a small way, in a small company, in your own world, don't ignore it. Don't ignore it. In the past cycle, I had a couple of young people come to me and say, look, I'm doing pretty well at my job and I like it, and they're taking care of me, but I think I should go get an MBA. And I say, well, and we talked about it a little bit, and anyway, one of them decided to go off and get his MBA. And he was doing reasonably well where he was. So he goes to get his MBA. The economy since 2008 gets worse and worse and worse. He comes back, and he went to London to get his MBA, went to a good school and did very well, all those things. Comes back to Toronto, can't get his old job back, just because the circumstances had changed so much in the period he was gone. And so, needless to say, it didn't work out very well. Now, I wouldn't wish that on anyone, and you wouldn't expect that to happen every time, but just something to keep in mind, Success is fragile. The other mistake I've made, and everybody makes in business, and in life, is don't solve tomorrow's problem today. If you've got an issue in your company and you need cash, and there's some financing mechanism there that someone's willing to give you, either they want you to sell shares at a price that breaks your heart because it's so low, or they want you to borrow money that you really don't want to borrow because, gee, how am I going to pay it back in 3 years or 5 years? I mean, do the best you can. Look at all the alternatives. but at the end of the day, solve today's problem. Many times tomorrow's problems don't show up. Something changes, circumstances change, the environment changes, the regulators change, something can change, so the problem never comes. And I see a number of people, again, personally and corporately, well, I don't want to do that because 2 years down the road, then I might have to do that or this. Forget about it. Solve today's problem today. And again, at a place like Goldcorp, which has been very fortunate and very successful, we have that discussion once a month about some issue that we're dealing with, and the reason we're not acting today is because of what might happen tomorrow, and you have to always bring people back to focusing on the problem at hand. You got to get to tomorrow. Just remember that. To solve tomorrow's problem, you got to get to tomorrow. Make sure you get to tomorrow. What else is And I guess the biggest mistake I made, and the biggest mistake a lot of resource companies make, involve debt. And we were talking at our table, when the commodity price is up, everybody wants to give you money. All the banks want to give the companies money, et cetera, et cetera. And being brought up in the society we've been brought up in, we always assume that the institution has more knowledge than we do. So if the Bank of Montreal wants to lend me $1 million, well, they must know what they're doing. And so companies always take the money. And they're thrilled that someone's interested in, they're thrilled someone's going to write them a check, they're thrilled they're going to have access to the cash, but they don't think very clearly about what's going to happen if this commodity price goes back down. And most of the disasters that I see out there, and the one I'm going to tell you about that I was involved in, that's exactly what happened. And in my situation, I was involved with a mine in Papua New Guinea, and Rio Tinto was the operator of the mine, and the government of Papua New Guinea had a big interest in the mine, and the government decided to sell their shares. And so an Australian bank, and there was they were selling their shares for like $100 million. So this Australian bank, who knew the asset, who knew everything else, came along and said they'd lend us the $100 million to buy these shares. Terrific, fantastic. So we do all that, and the mine's working okay, and you got Rio Tinto running the mine, you got an Australian bank lending you the money. I mean, what could go wrong? So, of course, the gold price starts to get weaker, and then Rio Tinto starts to have problems with this mine. So all of a sudden, and we own shares, we own publicly traded shares that we bought from the government, so the shares start to go down and down and down and down and down. And the loan is due at the end of December. So starting in about February, the value of the shares we own goes below the amount of money we owe to the bank. And the bankers they'd taken me to tennis tournaments and taken me golfing and taken me everywhere had been so friendly. As soon as this ratio changed, all of a sudden everything changed. And the bankers were getting very, very nervous and not nearly as charming. And so that the shares dipped down, and in the summer, and I can't remember the numbers, but in the summer, we were way, way, way below what we owed the bank. And there was no hope for gold. Everyone was predicting gold was never going to go up. And so I phoned a broker in Australia, and I said to him, look, if these shares we own, if they ever get to $1, I want to sell them all. Because if I could sell them all at $1, I could pay off the bank and avoid the company going bankrupt. And the shares were probably trading at 65 cents or 70 cents, something like that. So that's fine. So then at 5 o'clock in the morning, at the end of September that year, and the loans were all due December 31st, my employees were all leaving. My CFO left. I was in the office when I was in there just all by myself. Stocks trading at 6 cents. And, everyone's written the whole thing off. 6 o'clock in the morning, this banker phones me, this Australian banker, and I won't try to imitate his voice, but he says, Ian, did you see what happened to gold last night? And I go, no, what happened? He said, it went up $50. I go, wow, $50, why? He said because the central banks of the world had agreed to limit their sales of gold. Because central banks had been selling a bit of gold, and they'd agreed to at least control their sales of gold. So the stock market reaction was like that in one day. So the value of these shares that I had gone from 75 cents to $1.10. And so he said, you phoned me and were you serious about selling all your shares? And I go, yeah, absolutely. And so because of the time zone in Australia, and this stock traded in Australia anyway, he said, okay, we can't do anything right now, but he said, as soon as the market opens tomorrow morning, he said, we'll start to sell these shares. So this announcement comes out about the central banks. The second day, gold goes up another $20 or $30, and I get all the paperwork organized because there's a lot of rules about selling all your assets in a company. You know, people own your stock and you own a mine, and they wake up one morning and you've sold the mine. But if you're about to go bankrupt, that's legal. So again, all of the lawyers working all night long to get all this ready. So the stock market opens in Australia the next morning, and there's people are looking for gold shares. I mean, people have just given up on the sector, but with these 2 days of gold going up, so these brokers in Australia, they start selling shares like crazy into the Australian market, and then Japan opens and they're selling into Japan, and then London opens and they're selling into London, and then New York opens and they're selling into New York, and by the end of the day in New York, they sold all the shares. And so this is like a miracle. I mean, an absolute miracle, you know? So of course my bankers in Australia, they're so happy that they're gonna get their money back, and this was the company I ended up with just some cash, but nothing else in it, where I went into the internet. But and then the third day, the price of gold started to go down again, and then it went down again, and it stayed down for another year and a half. And if you take a 10-year gold chart from, make sure I get my years right, if you take a 10-year gold chart from 97 to 2007, you can sort of see, looking at it from going this way, you can see gold going down, 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 and then there's a little blip right there. And then it keeps going down like that. And on a big chart, the blip's only this big, but I happened to be there, and I happened to have made up my mind to get out, and the market happened to be there, and the broker happened to want to do the deal, and so it all got resolved. As I said, by my previous lesser mistake, I then went into the internet business, so it eventually went bankrupt. But at least those people knew what business I was in, you know, at the time when they did it. But the other lesson that comes out of that is, I've also made this mistake is, and you've all done it with your stockbroker, or if you have it, you will, you'll say, well, gee, I own Apple Computer, and if it ever gets to $500, sell it. So all of a sudden, the stock goes up and it gets to $500, and your broker phones and says, hey, Apple just hit 500, you still want me to sell it? You go, whoa, no, you know, maybe it's going to go higher, and gee, I don't want to look foolish by selling it too soon, and so you cancel your sales order, and of course, then it goes back down, and then you wonder what stopped you. When you have made a decision to sell something, don't change your mind. It was a rational decision you made, that if, in my case, if these shares ever got to there, I'm getting out of them. There's always a temptation when they get to there that maybe somebody else knows something you don't know, and so you don't want to. You think people care, they don't, but you don't want to look foolish. Dominic's learned that. Okay, he's learned that. You think people care, they don't care. But so the biggest mistake is debt related. And again, in your personal lives, now look, in the world we're living in, everyone's going to have to incur debt to get through school or buy a house or whatever. It's just part of your life. But debt is the one thing that doesn't go down. The value of your house might go down, the value of gold might go down, but the value of the debt never goes down. And it's something to be very wary of whenever you're in a situation when somebody wants to give you some money. I guess so those are basically the different mistakes that I've made, and I've seen other companies make, and will continue to see them. I think you do really only learn from your mistakes, and but a number of you after listening to this, will go out and make all these mistakes. It's just human nature. You'll think, well, you'll think your situation is different, or that, well, the circumstances aren't exactly what that guy said, you know, or I know what things are going to look like going ahead. I guess the other overall thing is, especially in the commodity business, when, you know, Sudbury and this whole area and my life and Goldcorp is so tied to the commodity businesses, you have to be very careful that you don't think that tomorrow is going to look like yesterday. You can't assume what the future is going to look like based on the past. And that goes, of course, both ways. The price of oil is way down now. So what should people think? Should they be buyers of oil now at $40 or $50, or is it going to go lower? And gold has had a good, at least I don't know what it's done today, but it's had a good few days here, and so people are looking at it, and is it going to go up? Is it going to go down? Again, you have to take all the variables that you're aware of, make your own decision, and then stick with your own decision. I of course can't tell you what the final prices of any of these commodities are going to be. In general terms, I'm bullish on mining, I'm bullish on the resource business, I'm bullish on Canadians being in the resource business. I'm very proud of the fact that it's an industry that Canada really needs. It's an industry that really helps the Canadian economy. It's an industry that in other countries of the world, Canadians are considered leaders and get a lot of respect. And I can tell you, in your career, these things are important to you. These things are valuable to you. These things, you know, are very good things. The other thing about the resource business, having been involved with it for 30 years and been to a number of locations where I've been there when it's been an exploration shack, and I've done this in Chile, I've done it in Brazil, I've done it in Papua New Guinea, I've done it in Australia, I've done it in Quebec, I've done it in the Dominican Republic, etc., etc. You're there the first few times, and yeah, I'm there because there's some drill holes there, and it looks like it could be interesting. But then to go back a couple of years later as it's built, and then 5 years later, and then 10 years later, and see all the good things that the Canadian resource business does inside Canada and in all the other communities where we operate, it's impressive. Now, we can't seem to impress the NGOs, and we can't seem to impress the journalists, but to be in a career where you can meet a lot of fabulous people, travel to a lot of interesting places, and then actually do some good as part of the process is a big bonus. It's a big bonus. And so it's been a fabulous industry. You know, as has been mentioned, I've had ups and downs in it, but I believe in it going forward. I'm very pleased to be here at the Goodman School, at the Barty School. A lot of mining going on between Stan and Ned and myself. So you know, we're aware of the importance of the industry. We're all aware of the importance of the industry giving back, and we're all big fans of the mining industry. So thank you very much, and I'd be happy to take any questions if you got them.